I will say that if we get a rebound in MicroStrategy, in crypto, I anticipate that our participation in Misti will be greater than what you would expect if you were simply just long strategy and selling weekly, just out of the money covered calls. But you need to see a bearish to bullish reversal in Bitcoin for Bitcoin to recover, for strategy to recover, and for Misti to recover.
Now, if you guys want to see my whole entire $350,000 ETF portfolio, you guys can see it for free on the Blossom app. Yes, for free on Blossom. Using the link in the description of this video and in the pinned comment section, you get to see my portfolio, my trades, and so much more. And I will see you there on Blossom. This video and content is not financial advice. We are not financial advisors. Do your own research. It is for informational and educational purposes only. First question for you, Mike, is going to be, how should investors be evaluating to buy the dip with YieldMax ETF products? Because to my knowledge, I've noticed that, YieldMax pays a high distribution rate. So eventually, as a consequence of that, the NAV will fall. But also some of these underlying holdings, like Misti, for example, have been seeing the underlying go down. So how should investors be evaluating when to buy the dip on some of their favorite YieldMax products?
Yeah, I think you bringing up Misti is probably the perfect example of what we're talking about when we talk about the importance of the behavior of the underlying asset. Folks who've been following along in the crypto space will know that Bitcoin hasn't been doing particularly well of late. So it reached its highs in early October. So October 6th was when it got to, we'll call it 120, round numbers, we'll call it 125,000. Strategy, formerly MicroStrategy, which is the underlying stock on which Misti is based, that one peaked out much earlier. It actually peaked out on July 16th. So that was, it had significant declines since then. Actually, it was slightly higher, I think, in April, but, it had mostly recovered the post-Liberation Day declines by July 16th. It has fallen, as of today's prices, by almost 50%. It's like over 47%. And I think intraday we were down close to 48% in one of these recent trading days. Misti, obviously, because when you are doing a covered call, you buy the underlying stock, or in the case of Misti, because it's a RIC, you have to use a proxy. You can't actually use the underlying shares. That's the most important thing. When you enter into a covered call or a buy right, the buy is for the stock. The right is for the option you're selling against it. So if you're buying a stock that's not performing well, the buy right is not likely to do well either. It's one of the reasons why we say that that's 70% of the benefit that's going to come from a buy right is very likely from the performance of the underlying stock. And in the case of strategy, it's performing terribly. Bitcoin has not been performing as badly. Strategy is a levered play on Bitcoin, but it's actually even underperforming its leverage, I have to say. Strategy has been recently. So we know that strategy generally trades at a premium to Bitcoin. And the reason it trades at a premium to Bitcoin is, number one, they own a lot of it. So at the very least, the company should be worth its liquidation value, which is the amount of Bitcoin that they hold. Just for round numbers purposes, let's say that they own about 640,000 Bitcoin right now. And Bitcoin's trading around $100,000 right now. Again, I think round numbers are easier conceptually. So that means that strategy, just on a liquidation basis of its Bitcoin holdings alone, is worth about $64 billion. That's just the value of their holdings. That's the book value. But it is typically traded at a premium to that. And the reason is because Michael Saylor has been creative about how he uses his balance sheet in the capital markets to finance the purchase of additional Bitcoin at prices that effectively are accretive to shareholders. So one of the earliest examples of this was when he was selling zero coupon bonds. So he was essentially borrowing money at no interest and giving the lenders the right to buy strategy shares at a significant premium to its prevailing price, and then using the proceeds to buy Bitcoin. And what did this do? What it meant was that the shareholders of Bitcoin were effectively entitled to the first 50% of gains in Bitcoin, and then the bondholders would essentially have the benefits of any additional appreciation in Bitcoin thereafter. So effectively, what he was doing was using the capital markets to buy call spreads in Bitcoin for free, using Strategy's balance sheet to do it. People who observed what he was up to liked that and said, we think that whatever the market dynamics might provide, he'll be creative about how he does this. So we think it's worth more than the Bitcoin he holds because he'll continue to do this sort of thing. Now, as volatility fell, because convertible bonds have an option component, and every YieldMax investor knows that implied volatility is something to take advantage of. Michael Saylor was doing it in Strategy's case. But as volatility fell, and it has fallen, so volatility of Bitcoin has fallen, volatility of MicroStrategy has fallen. So he's had to come up with other ways to finance his purchases, and he did so using things like preferreds and things like that. But the net effect is that basically the premium that Strategy enjoyed relative to Bitcoin has diminished. I think it's about 1.3 to 1 or so right now. Again, this is round numbers. People can go and check what it is exactly, and it's always floating as a function of the price of Strategy in Bitcoin. My long-term view on crypto remains unchanged. I remain bullish on crypto, and I am bullish on Bitcoin, which I think is, if we're going to think about cryptocurrencies, it's the granddaddy of them all, right? It's the most important one. And therefore, I have a positive long-term view on Strategy as well. But there's no denying the fact that right now it's in a very technically weak period. It's below its long-term trend lines. And from my perspective, I think it's hard to get really strong short-term conviction on it until you see it break above those. Now, it depends. Everybody uses maybe different long-term trend lines. I tend to use the 150-day. Others may use the 200. But you need to see a bearish to bullish reversal in Bitcoin for Bitcoin to recover, for Strategy to recover, and for Misti to recover. Now, one quick point I would also make is that Misti, this is not a big consolation to Misti shareholders, by the way. Misti has outperformed MicroStrategy since that July 16th peak that I referenced by about 450 basis points or so. But 450 basis points of outperformance is hardly consoling to an investor who's seen declines of more than 40%. When we talk about the downside hedging benefits of selling covered calls, it's only for modest declines that you really will observe this. When you have sharp declines in the price of the underlying asset, it's not going to be that helpful. It is somewhat helpful, but, not that helpful. I had a former colleague of mine. I worked at a hedge fund in Los Angeles many years ago. We were talking about our relative performance, how we were outperforming other assets. It was a weak market at the time. And he immediately snapped back when somebody made a mention of that. He said, you can't eat outperformance, meaning that if you are down less than the underpinning assets or your competitors, that's still not helpful, right? So he didn't view it as very consoling. I don't either. I think it's important to point it out that it is acting as it's intended to. Another point, this came up on one of the X Spaces we did recently, and that is that we don't just sell covered calls. So it's not buying a proxy for the stock and selling a covered call straightforward. We sell call spreads, and sometimes you will see that it's not even completely covered call spreads, meaning that a sharp rebound will tend to get slightly more relative performance compared to the underlying asset than a straight covered call would have. Now, unfortunately for all of us, Strategy hasn't had a rebound to illustrate that, but we do have two other covered calls that show what the effect of that as an investment strategy can have. AMD and NVIDIA in recent weeks, now AMD gave back a decent bit post earnings. Today we probably saw that, but both had sharp moves higher in recent weeks. When they did, so in 1 week, I think it was 2 weeks ago, NVIDIA was up about 15% from one Wednesday to the following Wednesday. And this was in and around, some of their important announcements. And NVIDIA, which is our covered call ETF on NVIDIA, was up 11.5%. So that if you had normally just sold a 1 week covered call up, say 3% or so, you wouldn't have enjoyed as much of that upside participation. Same thing happened in AMD, in AMDY. I wish we were in a better market dynamic for crypto. Feels like there's a little bit of a risk-off sense here, and that's bleeding through to Strategy even more. But I will say that if we get a rebound in MicroStrategy, in crypto, I anticipate that our participation in Misti will be greater than what you would expect if you were simply just long strategy and selling weekly, just out of the money covered calls.
Now, if you guys like this video, please give it a like because this cute puppy did. Thank you so much for watching. And once again, this is not financial advice. Do your own research. Investing is risky once again. And check out our last video on your screen. I love you guys so much. Crush on the stock market and take it easy. Peace.